Choosing health insurance independently can be overwhelming with factors like plan benefits, tax credits, premiums, and upcoming 2024 plan changes. It is challenging. And to ensure that you're making the right decision, and how do you begin the process of selecting the best in health insurance plan? Well, we want to have a conversation. And joining us now is the co-founder and CEO of Stride Health, Noah Lang. And Noah comes to us to give us the information that we need. And you know, Noah, when we talk about health insurance, the first thing that most people want to do is scratch their head, put their head down on the table, and say, listen, this is not for me. Let's just get it over with. A lot of obstacles. So talk to us about why is choosing health insurance such an arduous task for so many people?
Thanks for having me. And you're right. A lot of folks want to just bury their heads in the sand and move along. It's hard because healthcare is a different language than we speak every single day. The healthcare system in this country hasn't necessarily made it a lot easier to understand it, but it's also buying insurance, not expecting and not understanding what's going to happen in the coming year. It's a pretty complex decision for us to figure out the doctors you need and you want to keep, the things that might go wrong this year that you need to go ahead and account for, and even the current prescription drugs or day-to-day care that you might need and how much it's going to cost in every health plan. It's a pretty tough task, so it's reasonable that it feels hard, but it's a terrifying decision to go uninsured and avoid it altogether.
So what do I do if I'm out there and I'm saying, listen, I got to choose a plan. I know I have a plan that I have to have in place. What are the best things that I should do when factoring the decision and making a plan?
Well, first, don't procrastinate. You have to make a decision by December 15th if you want to be covered for January 1st. So don't wait until the last minute. You'll have a lot less help and a lot less options in terms of making a decision. The second thing is look at your whole budget. Don't just look day to day, week to week. Look across the whole year and figure out what you might be able to spend on your health insurance premiums and go consider what might happen this year. If you need preventive health care and you're otherwise young and healthy, perhaps you can go with a higher deductible health plan. If you have specialists that you need to see regularly, you might consider paying a higher premium to save on your out-of-pocket expenses throughout the whole year. And if your family takes any prescription medications on a regular basis, you want to go ahead and figure out what those might cost you in every health plan. So don't just compare health plans and make a decision based on what looks like the cheapest plan in terms of health insurance premiums. Go look at your healthcare needs, try to figure out what you might spend over the coming year in healthcare, and build yourself a little apples to apples comparison in terms of those health plans and your personal financial or healthcare needs.
Since the pandemic, we know that more and more Americans have opted for becoming self-employed. Entrepreneurship numbers continue to rise. For those out there that are on the self-employment bandwagon, help them through.
Sure, yeah. It's an amazing evolution of how people work today. A lot of people are taking the leap, but one of the scariest things that happens is how am I going to deal with healthcare? What do I have to think about in terms of my taxes? And how am I going to plan for retirement? Healthcare is usually one of the biggest blockers to making that leap. So if you've made that choice and you've taken that leap, you're now on your own. There's no employer making that decision for you. But the good news is there's sites like stridehealth.com, my company, to help you through it. And there's a lot of pro tips, and I'll give you one of them today. One is when you earn self-employed, you actually can deduct all of your expenses from your income to see if your total income, to see if you qualify for advanced premium tax credits. These were created under the Affordable Care Act to lower the cost of health insurance premiums when you buy insurance on your own. And they can be pretty impactful. So if you live in New York, you can earn up to $100,000 a year and still qualify for a advanced premium tax credit. The way it works is the government pays your health insurance plan that amount. You pay the rest of it every single month. A family of 4 living in New York can make up almost to $200,000 and still qualify for a tax credit. So if you're self-employed, take a minute, see if you qualify, and then also do the work because you can deduct self-employed expenses from your income to increase the likelihood of a tax credit. And it can be a pretty dramatic impact. Almost half the people that we covered last year who were self-employed qualified for a nearly free health plan.
You brought the word tax credits, and I want to spend a moment there. A lot of people, if I get a tax credit, I want one. How do I know if I'm qualified for a tax credit?
Well, there's a bunch of options. So I will share. I run a company called Stride Health. It's at stridehealth.com. We have a super easy to navigate platform where you just put in your income and we'll tell you. We'll tell you what you might qualify for. You can go locally to the New York State of Health, and they will do a similar thing to tell you if you qualify for an advanced premium tax credit. What you have to do is you estimate your income for next year, for 2024. It's an estimate. And so if you get it wrong, you'll adjust it in April of 2025 when you pay those taxes. But basically, you just need to estimate your income, and the government will then verify your income once you enroll, and they'll pay your insurance carrier every single month when your premiums are due on your behalf.
That's good information right there. So give me a little bit about this here, because when I talk about tax credits, uh, obviously we want to make sure that we're maximizing our dollar, getting the most for it. Looking out and projecting into the future, can we look and expect that more and more that are on that self-employed side can look forward to seeing possibly those tax credits?
Absolutely. Those tax credits were increased in 2021. The government will look at them again for 2025. So this is a critical year to take advantage of those increased tax credits. We've seen dramatic growth in folks qualifying. Basically, 8 to 9 out of 10 people should expect to qualify when you look at those tax credits. And these are pretty unique tax credits. You don't have to wait until next year to use them. You can use them right now, enrolling by December 15th for January coverage. And the government will pay that tax credit in January and in February and in March. You don't have to wait a whole year.
Good info there. I want to go back for a second. So many people hear these terms, and I don't want to take for granted that maybe all of our audience does know, but when we hear the word open enrollment, sometimes people are like, ugh. What does open enrollment mean? Define it for somebody that's out there. And as we say around the block, make it make sense.
Sure. There's a lot of terms that don't make a lot of sense in healthcare. There's open enrollment, there's HMOs, there's PPOs. I'm happy to break them down for you. Every year, if you buy your own coverage, there's a window. There's a period of the year in which you can get your own health insurance, and then you can't anymore. So for New York, enroll by December 15th to get covered by January 1st. There's a follow-on window in January where you can still get covered for February 1st. But if you miss that deadline, you have to wait a whole year, unless there's what's called special enrollment. You lose a job, you get married, you have a baby. There's a few things that qualify you to get coverage, but otherwise you can't. And so it's a pretty tight window to go get your coverage and get the job done. It's open because you can get covered thanks to the Affordable Care Act, regardless of your age, your gender, your illnesses. Someone can't charge you more, a health plan can't charge you more based on a chronic condition that you're managing. Everyone's available to do it, and it's open in that very sense, but only for a tight window.
All right. Well, we've got a whole lot of information. Noah, thank you so much for being with us. He's the co-founder and CEO of Stride Health. And thank you for making it make sense for us when it comes to open enrollment, because we know a lot of people are out there scratching their heads and struggling, but you just cleared it up for some. As we said, that period actually goes on between now and January the 16th. Noah, thanks much.
Thank you for having me.
All righty. Now, if you do want more information, visit the website at stridehealth.com and then follow them on social media at Stride Health. We encourage you, don't go anywhere. We are back with more Open coming up right after this.